Hi everyone, welcome to today's video. So on today's video, I'm going to speak about two specific stocks. These are two stocks that I've recently purchased and I'm going to continue to make more purchases on these stocks. So please watch the video till the very end to understand my rationale of buying these two stocks. Second and more important point regarding these two stocks that I'm going to talk about is that these are high input cost businesses. Very important category for us to understand because India is going to export more stuff, especially after the breakdown of China's supply chain. So very important video from that angle. So please stay tuned till the very end. Since we are on the topic of saving cost, one of the biggest costs that we incur is in terms of our healthcare expenditure. So a big shout out to the official sponsor of this video, which is Ditto. I love their insurance product. All my family, my extended family have watched my videos on Ditto and have purchased insurance from Ditto. I absolutely love the product for one simple fact that you can actually educate yourself about insurance before buying the product. So it's not like that, hey, just look at random website and buy the product. You can go schedule a phone call with an expert for free, absolutely free. You can use the link in the description box to schedule that free phone call, understand your health insurance requirements and accordingly buy a relevant product. So with that said, let's get the video started. Now the first stock that I'm talking about is Asian Paints. Now I've been waiting for this stock to correct. It has corrected a bit today. It has corrected by 6%. Now why is 6% such a massive thing for Asian Paints? Because if you take a look at the market cap of Asian Paints, it's almost 300 crores. It is massive. It is a huge company, extremely good brand value. So these type of stocks do not fall a lot. So whenever they fall, it is okay for us to aggregate it. They might fall further, no problem there. These are stable businesses, they will come. Now, an important point for us to understand is that why did this massive stock fall by 6%? So the market is falling, that's one obvious reason, but the market corrected today by approximately 1% and Asian Paints fell by 6%. Now the reason for the fall is fairly simple, that people were expecting much higher results from Asian Paints. Unfortunately, this quarter they were not able to meet those expectations. So therefore the Asian Paints fell and the stock corrected. But we need to keep a slightly more long-term view on this stock and let me take you through some very important points on this stock. So here is the article about Asian Paints result, very fresh off the press. So PAT, which is profit after tax, slumped by 28% year on year and the company will still pay a dividend of 3.65. Now this was a very important point here and this is where you can understand more about the business and a slightly more mid-term to long-term outlook of the stock. And the paragraph says that steep inflation seen in raw material prices since the beginning of the calendar year has been phenomenal and has impacted gross margins across all businesses in the quarter. Now this is a very important point. I have been saying that we are in a high inflation environment and this high inflation environment is going to continue for the next few years. This is point one. Point two, Asian Paints is a high input cost business. So the paint that you see, eventually how it is manufactured, a lot of raw material goes into it. If the price of that raw commodity increases, for example, right now the petrol prices are becoming like paneer prices, right? So it is just going up and up and up. So almost all the raw material that you are seeing, be it coal, be it energy, be it petrol, why is it rising? Because the inflation is rising and this phenomena is going to continue for the next 10 years because we have moved to a world where the interest rates are very low. Again, let me know if you would want me to make an entire video on this topic. It's a much elaborate discussion, but the bottom line that we need to keep in mind is that it's not as if that Asian Paints has become ineffective in terms of how it's running its operations. Absolutely not. It is still a very reliable, good company. It is just that the input raw material cost has increased and the product prices for Asian Paints has not increased proportionally. Very important point. I'll say that again. That the raw material prices for Asian Paints has increased, but the product prices for Asian Paints has not grown proportionally. I have made a separate video on HUL where I talked about that how HUL has increased the product prices by 12 to 15% for a large number of its product. It's a pure FMCG product. Again, Asian Paints is in the process of doing the same. And this can be vetted through this paragraph. Singhal says that the company will look at further price increases going ahead to mitigate the impact of this persistently high inflation. So it's given that Asian Paints is going to increase the prices. Prices for everything is going up. That is the reason why you must understand stock markets and start investing in some assets or the other. If you keep putting your money in FD, really bad returns will happen. Okay, so this is the bottom line. I will not talk a lot about Asian Paints today. I will spend more time discussing the second stock, but let me know if you would want me to make a detailed video on Asian Paints. I gave a very quick input on Asian Paints because I invested some money in Asian Paints today. Now this is not an investment advice. Please do it at your own risk. But I'm just sharing transparently what I'm doing and why am I doing it. One big reason was this. Now let's move on to the second stock where I would like to have a slightly more detailed conversation, and the name of the stock is Aarti Drugs. Now, one of the key reasons why I'm buying this stock is because I want to diversify my portfolio. So I'm looking to make some investments in pharma / healthcare oriented business, specialty chemicals business, and Aarti Drugs, according to me, is a good business to take a look at. So let me take you very quickly through what Aarti Drugs actually does. So in the API business, I'll explain that in a minute what API means, but through API, it makes 79% of its revenue. So it's a very big company in the API space. This is one key point that you must remember, that if you're betting on this company, you are essentially betting on the growth of the API industry in India. That's it. Okay, that's the point. So people who are new to the pharma space, people who do not know much about the healthcare space, let me very quickly explain what API is. And this article summarizes the entire API industry in India really well. I will put the link in the description box so you can check it out. Okay. So essentially API is active pharmaceutical ingredient. This is essentially like raw material for drugs. This is like raw material that goes into making of different types of medicines. That's it. For example, we have paracetamol. So that paracetamol is the end product. That's the medicine. But in order to make that paracetamol medicine, there will be some API that will go into it. So API acts like a raw material for creation of this particular medicine. Now here is the interesting part, that if you read this article, India imports approximately 68% of its API from China itself. Now China is the biggest market for API. It supplies API all across the world, and after COVID there has been a lot of backlash on China for obvious reasons. That sometimes they hoarded masks and bunch of different things, bunch of bad stuff. I'll not talk about that. Xi Jinping will get miffed. But back to the topic. Now it's obvious that countries want to avoid their dependence on China, and B, they want to build their own internal supply chains. That is a very important concept component. Therefore, this API, which used to be an import dependent industry, that we used to import a bunch of stuff from China and bunch of different countries, we want to be self-reliant in this space. Not because just we want it, but because of the fact that we have no other option. And same goes for other countries also. So this industry will see a lot of activity. Now this is very well encapsulated through this paragraph, that India's bulk drug industry grew at 9% CAGR before COVID, right? Now the projected CAGR for this industry is 9.6, which is good, right? Which is decent because this industry is growing, right? Now if you identify a good stock in this industry, put some money in it, likely scenario is that it will grow. But if you talk about government taking initiative in certain industry, it's taking initiative across all the industry. So this doesn't make it special. So we need to have a more realistic discussion around that. Now let us first and foremost understand that where is it that India is lacking in terms of the API industry right now. Best way to do that would be to compare India's output compared to China's output in this space. And here is an excellent chart for you. Again, I will link this in the description box. You can check it. So now this is a very realistic measure. I'll put the chart here again. Now essentially it talks about the breakup of cost that goes into manufacturing API. And this is a very realistic scenario that you need to understand. Because what? Right? Because API goes into creating medicines. Now if this API cost in India is very high, then of course India will become really bad at this in terms of being self-reliant and self-sufficient. So we need to have an understanding as to what India is doing to bring down the API cost. So let's compare that with China. So on the left hand side you can see India, and on the right hand side you can see China. Now raw material wise, India is more expensive. Now this is a high raw material cost oriented business. So we are more expensive here. Power and fuel, again we are more expensive here. Manpower, okay, we are at neck and neck, but in India this situation will improve because China, the cost of labor is going up. So going forward we can clearly see that India is going to win. Now there is no point in going into these other segments, because if we can just somehow manage raw material and power cost, it is given that India's API industry will become very effective. So these are the two major cost drivers for the industry, and we must understand this point more cleanly and easily. Okay, so is there an avenue for us to save on this cost? If the answer is yes, that the API industry in India will become more cost effective going forward, then yes, it's a bet worth taking. In my opinion, India can do it, and here are a few reasons why. Number one, there is massive consolidation that is happening in the healthcare sector in India. Now, let me take you through an important article here, and let me point out to some of the key things that are happening. Now, here is a very important paragraph. For the first time, private equity giants are setting up separate dedicated platforms aimed at taking controlling stakes in Indian bulk drug makers. Carlyle and bunch of different big private equity companies are stepping in. And what do these private equity companies generally do? They take a stake in a company, they turn the structure around, they make it more cost efficient, and then they sell their holding. This is the usual structure. Now, if private equity game is happening in this industry, then we should seriously consider investing in this industry from that particular perspective, because it's not as if that, you know what, Aarti Drugs is going to become like suddenly very cost effective or something of that sort. But if PE money is flowing into these type of companies, they can unlock hidden potentials in these companies and bring the cost structure down. They see it, therefore they are investing in it. And very important point, and press the like button if you like this. If you invest before a private equity company invest in that company, and if you are right about that, you stand to make at least 5x money. So this is the bet I'm taking, and that is one of the primary reasons why I'm investing in Aarti Drugs. Now the second reason is that we already have existing capacity. It's not as if that India is at a very nascent stage of API development and we have not done any work on this front. Now this graphic shows that if 100 units of output of medicine happens in the US, then where can that API supply come from? So 28% of that comes from the US itself, 26% comes from EU, 18% comes from India, not bad. China 13%, we are ahead of China here, and rest of the world 13%. So if private equity money has to flow from developed countries to developing countries, which geography do you think this money will flow into? It will flow into India, right? This is another key reason that makes me confident about investing in this stock. And third and finally, this is a very important paragraph. I will link it here, so please take a look. This is very important because one of the key reasons for developing or investing in the API sector in India is that we need to. There is just no other option. We just have to invest in this post-COVID. And I'm not saying this from a criticism purpose, but in India, unless someone kicks you, things do not move. Now, COVID has been a kick in the back for us. It literally exposed the poor healthcare infrastructure in India, our need to be self-reliant in the healthcare infra space, medicine manufacturing space, and the pharma space is completely contingent on developing the API sector. So we have no other option but to do it. Alright, so with this small discussion, I hope you understand the value of the API sector, why is it growing, why India can grow, what is the need for India to grow in this sector, because this is an industry driven play. Here you can go and invest in literally any company, that's not a problem. This is not a stock driven play, this is an industry driven play. If the industry grows, these stocks will automatically grow. Sitting and analyzing the stock itself, that might not give you a lot of benefits. If the PE money flows into this, which I strongly feel that has started to happen, these stocks will automatically grow. If there's literally one point that you need to remember from this video is keep a track of PE money flowing into this industry. The moment that starts happening, these stocks will become rocket. Now you might say that, Akshat, why did you pick like Aarti industry only? So many good stocks are there. So okay, one, please comment which other stocks you would want me to analyze from this industry. I will do it. But for now, we will just quickly analyze Aarti Industries financials. Why this stock is a good stock to invest. Okay, so let's look at the sales. So sales have been constantly growing year on year, no problem. It has hit its highest 12-month sales this year. Now let's look at profit. So the profit has also been growing, right? This is not a problem. So let's look at cash flows. Now cash flow have become positive, which is a great sign because the company gets to reinvest the capital. So it's not as if that they are not getting paid on time and bunch of different problems. So if you look at financial, it's a solid company growing year on year. Profits growing year on year, they have free cash flow to reinvest into the business. Very good from that angle. So I will not speak more on that because the video gets super long then. But net, to cut the long story short, the financials are really good and it is trading at a decent PE. So the PE of the stock right now is 23.36. Very reasonable PE, no problem there. The moment private equity money starts flowing into this, 100% the PE expansion will take place. Now let's take a very quick look on the technicals of the stock. So now you can see that there was some volume in this region and the stock became a rocket during this time. This is where all the pharma, healthcare based stocks were going up. So Aarti Drugs also went ahead. It has been almost a year. The stock has been consolidating. The market has factored in a lot of good news, bad news. The stock has hardly moved. Why? Because there was no major volume that was coming into this stock. Why? Because PE firms were thinking whether we should invest or not. Now I get a sense that this PE money will start flowing in very soon. And that is when this stock will take its journey upwards. Now, why am I buying this stock as of now? Because it is trading very close to its support. So the stock has touched this point multiple times and has bounced back and it is trading somewhere here. So it's very likely that it will give a breakout anytime soon. So it is very likely that even in the short term, it can show an up move the moment the money starts coming into the pharma/healthcare sector. Another important point to observe is that if you take a look at the highest levels for this stock, it was trading somewhere around 1050. Now the stock is trading at approximately 600 levels. There is good uprun to be had in this stock. Therefore, I am investing in this sector and this particular stock. Okay, so there was a power cut, so I had to come out to shoot this video. This is a surprise for all of you. Okay, so let's talk about the last section. If you are looking to invest in this stock, start aggregating small quantities as of now. If you see private equity investment coming into the stock, then buy larger quantities. This is how I am going to play it. Do check the link in the description box to learn more about the API industry. Also go and reach out to people from Ditto. Fabulous company. You will learn a lot about healthcare insurance by speaking with experts. Give it a go and I will see you the next time.